Happy Friday, traders. Thanks for joining me this Friday on the 14th of August, 2020. It's 8:01 a.m. Chicago time. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1819 this morning. Looking at the overall risk allocation this morning, it looks like it is leaning towards safety with the NASDAQ being higher. NASDAQ is the only index that I'm tracking, which is positive on the day, trading at around 11,200. NASDAQ's up 0.2% or 22.75 points. The laggard this morning is the Euro Stoxx 50. This is the kind of S&P 500 of the Eurozone. It is down 53 points or 1.6%. The DAX is off 151 points and falling 1.16%. And gold is off. Gold trading at 1954, down 16 and a half dollars. Or down 0.84%. We're seeing the S&P only down 5 points from yesterday's close or settlement, or 0.15%, trading at 33.6275 on a relatively decent volume. The Bund, the 10-year, the 30-year bond, the yen, the cable are all higher this morning. So that's where we stand today. Hopefully you had a productive week. Lots and lots and lots of movement in the markets for August, and some, in my opinion, and that not to discredit or make anybody feel bad, but the market's been auctioning quite well with some adjustments. So that's where we stand this morning. In terms of what's on deck, nothing in the earnings calendar for today. And then, of course, for in terms of the economic calendar, the Eurozone releases GDP. The GDP growth rate year on year came in at negative 15% as expected, and Q on Q came in at 12.1% as expected. Retail sales in the U.S. came in at 1.2% worse than the 2% expected for the month of July. And then moving forward, we do have industrial production, which is a lower tier figure that's going to be released in about 12 minutes. And then at 10 o'clock Eastern, or a half hour after the open, we get business inventories, which can be a mover, expected at negative 1.4. But we also get Michigan sentiment, which very often is a mover. University of Michigan sentiment is the prelim for August, expecting 81.8, 81.8 for current conditions, and consumer sentiment, which is the headline number, is expected at 71.1 as the forecast. The consensus is 62. This is likely to be a mover. So just pay attention as we come into the top of the hour after the open. In terms of what was expected yesterday versus what we got, let's hop on over to our review segment. Again, you notice that every day it's the same routine. You gotta follow the same process and then adjust the process as needed. The primary scenario yesterday, let me check my pen, make sure it's normal. Okay. The primary scenario yesterday was a choppy open that drifts up, was really looking for to tackle the 75.76 and find resistance there before it rotates down, and what I expect it to be a bit of an impulse, consolidate at the open, and then continue lower against the overnight low. The overnight session was well bracketed between about 71 and 64 or so. This is kind of the overnight bracket right here. Expected it to take that out, consolidate for a little bit, and then finish somewhere in the middle. That was what I was looking for yesterday. Test up to about 75, 76, come back to the open, consolidate, come back lower, push lower down into the 60, 62 area, and then finish in the middle. That's the primary scenario based on the progress and the narrative of the auction, which is an important part of having a strong hand in the market, in my opinion. Here's what actually happened. We opened, and we took an upward drift as expected, but instead of turning at the 75, 76 area right here, expected to turn here, it consolidated, and then pushed to 82, which was higher than what was expected. Same outcome really, but pushed through to 82. Remember, the prior high was 82.5. Put in a lower high. There's, in case you have not noticed, there was formidable resistance, repeating iceberg orders, a lot of supply, a lot of liquidity, a lot of supply in the 80, 79, 80 area, and it's just continuous offering and reloading in that area up here in the 80 area. And then once it pushed through and couldn't get to the prior day's high, which is right here, the green line is the prior day's high at 82.50. Once it could not get through, then we get an impulse back, and I was looking for the open right here. I was looking for it to consolidate right here, and then we would get our second impulse, and I was looking for 61, the 61 area before it consolidates and sits sideways. The overall shape or the overall outcome of the auction was pretty much spot on. The levels, however, as always, I can't predict where the market's going to turn. If I could, then I would be managing your money and running, a $600 billion fund, and I'm not. That's you can check it out. I'm not running a $600 billion fund, and that's because I don't know where the market's going to turn. But what's important is what areas to watch out for. So as we've talked about before, we want to kind of visualize a pattern or a path for the market, but it doesn't need to be right. It really isn't about being right. It is about understanding how the market kind of gyrates, how the market tests extremes back to balance to the other extreme to so on and so forth. And that makes it seem simple. I might make it seem simple to you and pretty no-brainer, but it's not easy to trade it. And the reason it's not easy to trade it is because we cannot predict where participants are going to come in or squeeze or rotate or offer liquidity or whatever. But the overall, to me, what's important, because I can't control anything else, what's important is how the auction proceeded. And as I said, here's the expectation yesterday. As I said, I expected a push up, back, consolidate, test lower, consolidate, finish in the middle. And the reason for that is we are in an uptrend. We're one time framing up, but we have hit this area up here that we saw the market fail to kind of continue on. And so the market, when it does that, what do we expect? We expect the market to make another attempt on any pullback. But if it fails to do so, then we're looking for the market to push lower, to advertise lower before before it can continue. So we advertise lower, and then we finish up in the middle, and we have balance, and the expectation is we would finish somewhere on top of the acceptance that's been there. Remember, acceptance, these are the points of control, acceptance. This is a balance area that the market specifically likes, so we expected the market to have a hard time kind of pushing the other way, and that's what we ended up with. Again, this is where we are, and we expected the market to accept this area, and there's your point of control right there. Just as expected. Again, I'm not here to predict which way or the exact turning point. Can't do that. Don't want to do that. It's too much effort, and it causes it basically causes me to not be in direct contact or in touch or in the zone or in the flow or surfing the waves, and that's the goal. Yesterday, we had range extension up, and then we have range extension down, and that makes it a neutral day. That makes it a neutral day type. And because it closed inside of the IB, remember the IB is this yellow line and this yellow line. The IB is defined as the first hour's high or low. And the philosophy behind that, for those of you who are new, is that the market in general, the auction in general, does a lot of its discovery in the first hour. And so we outline where the first hour turning points are. Sometimes they don't really show up as turning points. This one did. You can see that it put in the high and it rotated down. A lot of times the hour is a high of a bar and the market continues, and that IB is not so valid. And so you have to see how things formed versus, oh, there's a line there, so that's what it is. It's gospel, like floor broker pivots. Well, how are they moving? What's the separation of the pivots? You got to look a little deeper than just whatever your trading platform is putting on your screen. It's hard to trade just a line. It really is. So you got to understand, and that's the whole point of this Trader Bite, is to every day come in here and with you go over the narrative, basically have you look over my shoulder. This is something I've been doing for the last 15 years. I've been trading for about 20 years. But the narrative is something anybody can pick up. You just got to understand the basics of the auction, understand how the market treats liquidity, how order flow goes, and with those pieces, we can then have in my opinion, a pretty strong hand in whatever trade we take because it's built on something that's more substantial than just, hey, there's a line here, so let me trade against it. So anyway, so we have a neutral day. Again, the market indicating yesterday or the day before, Wednesday, was not a neutral day, it was a normal variation day. And so we move into a neutral day, and that's how the market tops out. It rounds out, and it generally does neutral, then it does neutral again, and then it corrects. But this market doesn't correct very much. Normally, it rounds out, and then it does neutral, then it does neutral, and then you have a huge up day, and it flags higher. And so I don't know if this is what will happen, but we're very, very close to the 3,400. We have been making all-time highs, so the ES has for the last couple of years, when it makes new highs, it generally wants to auction the other way to bring in more interest or late buyers before it rotates up. So yesterday gave us this idea that basically left us with this idea that, hey, we had a tough time getting through the 80. We tested the 71, which we just tested just now, by the way. We tested the 70 on the push higher on the number a half hour ago. And then we're still holding sideways at 63 at the low end of the range right down here. Okay, so these are kind of the factors that are in there. Note that the delta was with price yesterday. The delta starts at 0 at the open. The open is right here, this green line right here. Started at 0, and it stayed positive for pretty much the entire session. Even after the market dipped, it stayed positive. There's pretty decent support for the price action yesterday. There was pretty good participation on both sides. We ended up with a double distribution profile with the low volume node at 71. And that's where we are today. We held that on a retest this morning. So pretty good narrative, pretty good rotations. Here's what we have for the order flow. I want to kind of move back here and show you this area was very, very tough yesterday. It finally poked through, but as soon as it did, more sellers came in and pushed this down, as I talked about. And since then, the order flow shows 3350 had a lot of liquidity, and that's the low of the overnight session. We'll talk about this in a minute. Look at how much traded at the low. 2,935 on multiple tests. 1, 2, 3 tests. And then it drifted up. The liquidity is coming back in at 3350, and what we have is a very, very weak low after the push higher. A failure to push above the 71 today and hold targets the 50, giving us approximately 20 points of range to this target. This is a weak low. It is likely to be tested at some point. And we could see the liquidity there really traded out. Big dots here, big size traded out. And we can see that a lot of volume traded at the low, which tells us that there's likely not to be excess there. We did not have excess. This price was not seen as too cheap. And so we are likely to walk ourselves down at some point. Maybe not today, but at some point, there's a marker here for the fact that it is a weak low. Above, the liquidity is resting at 86. At 86, and of course, liquidity is coming back in at the 80, where the biggest fight happened yesterday, and that's what we're looking at in terms of order flow. I want to take a moment and look at the composite just to kind of refresh us on where we are and what we've done so far. You can see that the delta, and this is using tick data, the delta is kind of dropping. The start of this delta goes a little bit back, but just compare it to where we are now. Here's the last major swing low. We had a pretty high delta at that point, and as the market pushes up, as the market prices push up, you can see the delta is falling, and so there's kind of what this is telling me potentially is as price is going up, it's the aggressors, the aggressors, the buy aggressors are not so strong, and that's kind of normal for a rally because it's buy and hold, and so as time goes on, as the price goes up and up and up and up, people see it as people see it as it's run away and I can't participate, or I don't need to be an aggressor at this point. And we get to a point where it's just there is no aggressor left, and then the market kind of rolls over and falls and corrects before more aggressors come in. But it's really a kind of a classic thing that we drive prices higher, and the delta is kind of falling off. This is normal. Also, generally, volume and range drop off as we push higher. As the VIX drops, you put your position on and you just sit there, and there isn't a reason to trigger market stops or anything like that unless we roll over. So, but when we do roll over, it generally forces a lot of hands, and when we see a spike in, as we saw here, we see a spike in range, a spike in the volume, and a spike in delta. But as price is moving up, aggressors are getting weaker and weaker, and that is quite normal. Okay, so it'll grind up and it'll just shoot down. Everybody knows that. But look at what we've been doing. I mean, from week to week, each one of these boxes is a week. We've been on a weekly tear here for quite some time. This here, the color change is intra-month. So this is a low week, lower, higher low, 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 higher low. And so we continue the one-time framing up. And so what's important here, you got to pay very close attention to these lows, especially on the weekly. Now we've poked through on the daily like we did this day. We poked through on the daily and broke the one-time framing up on the daily, but not much happened. The market turned around the next day, and we gapped up the next day, and we put in that high at 82.50. Then we put in a high at 82 yesterday. And so we're holding sideways. The market's kind of at a point of inflection here today, and it is Friday. And so we're at a point of inflection where we are opening pretty much where we closed yesterday, and we have this week high and we have a week low in the overnight session. So today should be pretty interesting in my opinion, but pay attention to this 19.5, 18 area. This is an RTH only chart, but pay attention. Once these break, the one-time framing on the daily reverses, and it becomes easier to kind of hold on to those shorts, which have been very difficult to hold on to recently. So let's look at what's expected for today. Oh, sounds off. Apologize. Let me start that over. Let's take a pay particular attention. Pay particular attention to this week low. We have this is a 30-minute chart. We have 30-minute bars. We have three TPOs at the low. The volume is at the low is really heavy, and so we have a classically beautiful week low scenario. Classically low, weak low scenario. And we have a push against that 80 high. So we've gone from stock zone to stock zone. Remember, these stock zones were not put in just because of the action. These stock zones came in yesterday. I should have sound. I don't know what's going on here, but I did have a mute for a second and I forgot to unmute, but I said everything again. Then we look at what it's done since the test, since the release of the number, and you'll see that there was a pullback structural low before the high was put in, and then we tested that level. This level is also the RTH mid from yesterday, and it carries over from way back the 70-71 area. So if it fails to continue higher, to push into the upper distribution here, this becomes a very, very important target, the 3250. And as we push through the 3250, we will have taken out yesterday's low, and the one-time framing up on the daily will have ended temporarily. So pay very particular attention to this 3350 area. We saw that there was a lot of liquidity there and a lot of volume that went off, and we could see it in the profile here that a ton traded down in this area. Okay, so that's the main thing we have to pay attention to. Beautiful structure here, a nice impulse. Again, we have an impulse, and then normally we would have a pullback, and we'd have at least a poke before it decides to push up. But this market does not have continuations on the impulses down. And so those people who are late to this party really got jacked here. The point of control, the overnight point of control is beneath us. This is an important structural element here, and it's expected to be tested. So here's what I'm looking for today. An open auction in range of yesterday. I'm looking for it to retest the 71, attempt to push higher, consolidate, roll over, and start to work its way down into this 55 area. If it cannot hold this 55 area, then it's likely to push through this 50, and then we're looking for it to slip and slide down into 43 before the bounce. 43 is down here. A lot of structure for this 43 coming from back here. So that's scenario one. I almost feel like I almost feel like it's a wish list scenario. The secondary is it sits here. We recognize that we couldn't push through the 71. We open, we drift down, we push down near yesterday's RTH lows, consolidate, poke through, then we get the impulse back to the open, and then we squeeze into the upper distribution like we've been doing, and we work our way back into that 33, 79, 80 area for another test. Now this is essentially the 82.50, and the 82 is essentially a double top, a weak high. So I don't know if it'll have the energy to push through, but given that it's a Friday, it might consolidate and poke through before it finishes into the weekend. We're looking for it to rebalance, the risk to rebalance into the weekend. I know those are far cries and a lot of range, but what we have here is 3 days of overlap. Look at these profiles. Boom, boom, and then wiggly, 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 wiggly. There's a lot of balance here. We're likely to see a push, a strong push one way or another today. Okay, good luck. I know I ran over my time. Good luck. And don't forget to subscribe. If not, just go to ft71.com/YouTube. Don't forget to subscribe to the channel so that when I post a video or set up a trader bite, you get an automatic alert. Good luck. Take care.